This one indicator just made me 300% more profitable, and I'm about to show you the 5 ways it works that 99% of traders never see coming, including something that I call the stochastic snake effect that predicts explosive price moves like a cheat code. Forget everything you think you know about the stochastic indicator. Today, you're getting the hidden indicator setting most traders completely miss, the 50 mid-level entry hack professional day traders don't want you stealing, a completely backwards 90-10 overbought and oversold rule that flips traditional trading on its head, and my personal discovery, the stochastic snake effect, not one, but 2 trading setups that can help you catch trends before they go parabolic. And here's the kicker. This setup not only helps you ride trends before they explode, but also keeps you from making the costly mistake of bailing too early on a market that keeps pushing higher. This isn't clickbait. These 5 fixes transformed my worst losing streak into 300% gains. Look, I get it. You're probably thinking, another trading guru with secret indicators, but this is different because I was exactly where you are right now. But first, let's talk about why you're here. Have you ever felt like the market is out to get you? Picture this. You're staring at your trading screen, watching your account bleed money as frustration builds. It feels like the market is doing the exact opposite of what you need. The market is moving in every direction except the one you want. Sound familiar? What if I told you there's an indicator you've been using completely wrong and it's costing you big profits? Today, I'm revealing the ultimate trading secret that most professional traders won't share with you. It's all about the stochastic indicator, but not the way you think. Here's the deal. 1 indicator, 5 game-changing uses, and the potential to boost your profits by up to 300%. And trust me, this isn't some basic, boring buy low, sell high trading tutorial. No, we're flipping the script. Most traders see the stochastic indicator and think it's just a tool for overbought and oversold signals. They're wrong. We're not just talking about basic buy and sell signals. No. We're diving deep into a trading strategy so powerful, it'll make your previous overbought and oversold trading approach look like child's play. This isn't guesswork. I've tested these trading strategies in real market conditions. Blood, sweat, and trading losses have gone into discovering these trading secrets. And now, I'm ready to share them with you. But before we dive in, let me be upfront. This isn't for everyone. If you're looking for a get-rich-quick scheme or a magic button to print money, this isn't it. This works because it's boring to amateur traders. There's no flashy Lambo talk here. Just 5 battle-tested trading strategies that print profits when others panic. So, are you ready to see the stochastic indicator like you've never seen it before? Let's unlock this ultimate trading secret together, because once you see what I'm about to share, everything will change. But, fair warning, if you skip a single minute of this video, you'll regret it next time the market crushes your trading account. Let's get real about the stochastic indicator. Most traders think it's just another fancy oscillator or another technical indicator that doesn't work, but it's way more complicated than that. So, what exactly is the stochastic indicator? It's a powerful momentum oscillator designed to measure the speed and change of price movements in the market. Here's how it actually works. There are 2 key lines or moving averages that define this indicator, the %K line or the main line. This is the heartbeat of price momentum, and the %D line or the signal line. This is the smoother, more controlled companion. And here is how it calculates momentum. First, it compares a stock's closing price to its price range over a specific period. It moves between 0 and 100, revealing market footprints. The 0 and 20 range, market is oversold. The 80 and 100 range, market is overbought. The crazy part, while it's technically a leading indicator, it's got a hidden lagging personality. Most traders see this as a weakness. Why? Because it relies on past price data. But in the next few minutes, I'll show you how to turn this into your biggest trading advantage. In volatile markets, most technical indicators fail. They produce crazy whipsaws and false signals that make traders lose money. But the stochastic, when used right, it becomes your secret weapon. Most traders see choppy markets and panic. They see their indicators giving conflicting signals and they freeze. But what if I told you there's a way to make the stochastic work perfectly in any market conditions? Volatile market, ranging market, trending market. By the end of this video, you'll know how to use the stochastic in all of them. We're not just trading, we're decoding price action behavior. Most traders are flushing their money down the drain because of one single rookie mistake. They're using the default indicator settings. Seriously, who sticks with factory settings? Let me show you the ultimate trading cheat code that almost nobody knows about. The stochastic indicator comes preset to 14 periods, but that's wrong. The secret sauce, set it to 20. Boom. Just like that, you've unlocked the next level of trading. Why 20? It's not random, but it's a direct pipeline to the smart money playbook. It's tied to the holy grail of professional trading, the 200-day period moving average. This isn't me making stuff up. The 200-day moving average is the ultimate line in the sand for survival. Just ask Paul Tudor Jones, one of the richest hedge fund managers in the world, who called it his get out alive rule. My metric for everything I look at is the 200-day moving average of closing prices. I've seen too many things go to zero, stocks and commodities. The whole trick in investing is, how do I keep from losing everything? If you use the 200-day moving average rule, then you get out. You play defense and you get out. By stretching the stochastic to 20 periods, you're aligning with the same math that separates casino gamblers from cold-blooded pros. Why 20? It's 10% of the 200-day cycle, the same rhythm big money uses to spot real trends. Now, changing the stochastic to 20 periods is only half the battle. Want the full power? Here is a bonus hack. You must adjust the %K smoothing from 1 to 3. Without also changing the %K smoothing to 3, you're still stuck with shaky, unreliable buy and sell signals. Increasing the %K smoothing to 3 forces the stochastic to ignore tiny, meaningless price swings. Here's the brutal truth. If you don't fix this one indicator setting, the other 4 strategies I'll show you might as well be useless. Without it, your entries will bleed, your exits will lag, and those 5 uses I'm about to reveal, they'll collapse like a house of cards. The stochastic indicator's default 14-period setting is like trying to win a Formula 1 race with flat tires, and it's designed to fail retail traders. Want proof? Just compare the 14-period to the 20-period. Let's break it down. The default 14-period, it overreacts to every little price changes. You'll get fake buy and sell signals constantly. You'll get 8 to 10 fake signals in the time it takes the 20-period to give one high-probability setup. But the upgraded 20-period, it cuts through the noise. And you'll get only the trade signals that have potential to turn into winning trades. Change your indicator settings, and you're playing defense like a pro. And we're just getting started. Traders, you think you know entry points. You don't know jack until you understand this insane mid-level entry hack. Most traders are blind to the most powerful entry strategy ever. We're not gambling because the 50 mid-level is our secret trading hack. Most traders see the 50 level and do nothing, but you're going to weaponize it. Here's how it works, and pay close attention, because this is critical. When the stochastic crosses above the 50 level, that's your buy signal. When it crosses below the 50 level, that's your sell signal. But here's the kicker. This only works on the daily time frame. Daily time frame, not 1 minute, not 4 hour, daily. Got it? I don't care what the talking heads on CNBC are saying. I don't care what your cousin's friend's broker thinks.
Loser.
And forget your buddy's random tips in that trading group chat. But here's the critical part. It works best in volatile markets. I'm talking about markets where prices are moving fast and momentum is shifting hard. That's where this trading strategy absolutely shines. And guess what? Every time the stochastic crosses that 50 line, something huge happens on the chart. A big displacement candle shows up. That's right. When the stochastic flips momentum, the chart responds. Boom, giant candle. This is your golden signal that trend momentum has officially shifted. Let me make this even simpler. Above 50, buyers are taking over, and you'll often see a big fat bullish candle to confirm it. Below 50, sellers are in control. And here comes that bearish displacement candle to seal the deal. It's not just a signal, it's the market screaming at you to act. Imagine knowing precisely when market momentum shifts. Imagine cutting through market noise like a hot knife through butter. That's what the 50 mid-level does for you. And guess what? You're about to dominate the markets. Are you ready for this level of precision? Keep watching. But before I reveal the oscillator snake effect, I need 10 seconds. Here's the deal. Comment shark mode below right now, but you need to be a subscriber, and I'll send you my momentum cheat sheet for free. It's a 1-page PDF that instantly spots displacement candles before they happen. But you've got 48 hours to claim it. After that, gone forever. Why am I doing this? Because I'm building an army of the 5% traders. If this comment section hits 1,000 shark mode replies, I'll drop a live trading breaking down how I turned this trading strategy into $27,490 in 3 months. Traders, what if I told you that losing trade you just took wasn't the market's fault? It was just your technical indicator lying to you. Here's the $1 million question everyone's ignoring. How do you spot strong market trends instead of fake reversals or even worse, fighting the trend? If you have the answer to this question, your broker will hate it. Ever sold when the technical indicator hit overbought, only to watch the market rocket higher? Or worse, it finally drops, but not enough to save your trade. It's painful, right? That's because oscillators like the stochastic have a dirty secret. They can stay stuck in overbought oversold zones for weeks, becoming even more overbought or oversold. And guess what? The market can stay irrational longer than you can stay solvent. Well, that flaw, the same one that's been costing you trades, can actually be turned into one of the easiest trading opportunities to make money. Enter what I like to call the snake effect. What's the snake effect? It's when the stochastic gets trapped in overbought above the 80 level or oversold zones below the 20 level for an extended period, twisting just like a snake and generating lots of false crossover signals. When you see this indicator oscillating in a super narrow range, it's not a signal to bail. It's a sign of a strong market trend. The market is screaming at you. We're in a strong trend. This is your chance to ride a massive trend move either up or down. This was my biggest AHA moment. Never short an overbought market showing the snake, and never buy an oversold market with the snake effect. Repeat this like a mantra, because fighting the trend kills more traders than the stop hunts. The snake effect equals smart money's footprint. They're not selling highs, they're adding to their positions. And your job, follow the smart money footprints. Here's the best part. The snake effect works its magic in strong trending markets. When the market is going wild and everyone else is panicking, this trading strategy is like your secret trade setup for riding the trend to the bank. But don't go anywhere. This is just part 1 of the snake effect. What's coming next? Let's just say part 2 is going to blow your mind. But wait, if you skip the indicator settings hack I dropped at the very start of this video, you're literally missing the secret sauce. You need those 2 critical settings to even see the stochastic snake effect and make this trading tool work. Imagine the price action is consolidating, but not just moving sideways. It's still trending, slowly building momentum. However, this time the indicator, instead of getting stuck in the overbought or oversold zones, like in part 1, the stochastic now oscillates in a very specific way. In a bullish trend, it swings between mid-level 50 and the overbought zone 80. And in a bearish trend, it moves between mid-level 50 and the oversold zone 20. If you've been following from part 1, you remember how the stochastic snake effect was tightly confined to small ranges, either hugging above 80 or clinging below 20. But now, things are a bit different in part 2 because this is a wider snake-like movement. This isn't a trend reversal signal either. It's the market getting ready for a breakout in the direction of the prevailing trend. A classic technical analysis momentum behavior. But wait, why does this even work? Because in technical analysis, market trends don't just explode straight up or down. They breathe, they consolidate, gather strength, and then break out into a new trend. That's exactly what this trade setup signals. Here's the kicker. Most traders would look at a consolidating market and think, bro, there is no action here. But you're about to jump in at the perfect moment right when the trend is about to pop off. And remember this, just like in part 1, this trading indicator doesn't just give you a signal, it gives you a trend roadmap. If you're still watching this, pat yourself on the back. This means you're now part of the 3% of traders who will ever see the indicator's 5th use. Brokers will hate this because it stops you from overtrading. But on the other hand, your trading account balance, it'll love you forever. So hit subscribe immediately, unless you want to end up like Greg. Let's just say Greg sold Bitcoin at $100 just because it looked overbought. Now, Greg cries in his Honda. Don't be Greg. If you're still relying on the default overbought and oversold levels of your favorite momentum indicator, you're doing it wrong. The standard settings, 80 for overbought and 20 for oversold, are practically an invitation for false signals to drain your trading account. So, what's the fix? Adjust those levels to 90 for overbought and 10 for oversold. This one simple tweak eliminates a ton of false signals that can cost you money. Why? Because by tightening those thresholds, you're demanding a much stronger confirmation from the price action before taking a trade. And, trust me, this change can be a total game changer. Here's the issue. When trading overbought and oversold signals, you run into a common problem: false signals. Imagine your favorite technical indicator crossing into the overbought zone at 80. You think it's time to sell, but instead of dropping, the market keeps ripping higher. Sound familiar? That's because most of those signals don't account for the nuances of today's fast-paced markets. But by switching to 90 and 10, you're essentially filtering out the noise. Here's the deal. When the stochastic crosses above 90, it's signaling extreme overbought conditions, meaning it's time to be cautious about buying. Drop below 10? That's extreme oversold territory. Think twice before selling. You're cutting out the weak trading signals and focusing only on the most reliable trading setups. Here is a pro tip. Some traders go even further, setting their levels at 95 and 5. There's no one-size-fits-all solution. Backtest different settings on your favorite markets to find what works best for you. Traders, you did it. You've just unlocked the price secrets of the ultimate trend indicator, and now you're armed with the tools to tackle trending markets like a pro. But wait, we're not done yet. What if I told you there's another trading strategy, one that's stealthier than anything we've talked about today, one that I discovered myself and named the Stealthy Inside Day? Click here to watch it now. This is your chance to connect the dots and combine today's lessons with a trading strategy that could completely transform your trading account. Are you ready to dominate the markets like never before? Go watch that video. It's waiting for you.